Hello, welcome back, guys. So, a couple of hours ago, in our Discord channel, we had an interesting discussion about Alibaba. Somebody mentioned that Charlie Munger actually gave an interview, and he mentioned that Alibaba is one of the biggest mistakes he ever made. And so, as you can understand, we had some discussion about whether he is potentially looking to sell or whether he has maybe sold already and we're just not aware of it yet. So in this video, I'm going to be taking a look at what he said, going to be taking a look at what is happening right now with Alibaba, what is happening in Hong Kong today as well, and also what we should be expecting from, from the future pretty much in regards to Alibaba. Now, let's first take a little bit of a quick look at what he said. So let's just watch the video quickly over here. Actually, let me put it in the very beginning. So
pretty stupid. It's like poking a bear in the nose with a sharp stick. It's not smart. And Jack Ma got way out of line by popping off the way he did to the Chinese government. And of course it hurt Alibaba. But I regard Alibaba as one of the worst mistakes I ever made. In thinking about Alibaba, I got charmed with the idea of their position on the Chinese internet. And I didn't stop to realize they're still a goddamn retailer. It's going to be a competitive business, the internet. It's not going to be a cakewalk for everybody.
All right. So he mentions a couple of things there. So the first thing that he mentions is the fact that Jack Ma was combative against the Chinese government. And it's a thing that we have talked about in the past. It was the case. Now, after a while, Jack Ma started kind of getting isolated from, Alibaba matters and didn't speak about the government anymore. So he kind of understood the mistake he made there. And so he hasn't been outspoken for a while. So I think this is probably fixed already. Now, the second thing that Charlie Munger is talking about is Alibaba being a retailer. Now, Alibaba is a retailer, but is also an e-commerce company. It's like a combination of both. And it's a pretty huge e-commerce company. And it's actually having a lot of frontiers in all sorts of different businesses. And if you compare it to companies like, for example, Amazon, for instance, you can understand that there is a lot to potentially do in the future. And so it does make sense for this for an investor to potentially hold this one for a long while because it has been making a ton of money. And although the margins are not great recently, we do know and we have talked about the reasons why this has been happening. And so the other thing that he mentions, the third thing, basically, is the fact that there's a lot of competition because it's a retailer. But again, we have to account for the fact that Alibaba is huge. And if you haven't, you may not have done it, but you may have heard about it. The vast majority, or a very large majority of Amazon products are actually manufactured in China, and in many situations, in most probably situations, with the help of Alibaba, which is like an intermediary. And so you can understand that the role of Alibaba is pretty huge, even if we're talking about Amazon themselves, and a lot of other things, again, for which we have talked about in the past. But it was interesting to see what he's thinking here, because a lot of people may be wondering, me included, whether he's looking to sell. Because if he's looking to sell, he will potentially rattle the markets for a while. Now, it will be temporary. And again, it may cause a drop for a day, a couple of days or so. But for the long run, it won't affect the company. But what is he looking to do now? We don't really know. But we do know what he has done in the past, and we do know what has happened recently with Michael Berry, who actually bought stock. So let's take a little bit of a closer look. First of all, Charlie Munger also mentioned that he likes big banks and hates crypto. Is another thing that I kind of wanted to briefly mention here in this video, because I think it's a pretty important thing. They do like big banks, and they keep buying banks as well, and hate crypto. We know about this one, Buffett included. But what have they been doing? Now remember, this was a new holding for them back in 2021 with 165,000 shares. And back then, take a look at this cost basis, 245. So they started buying very early and at a high price. Now, compared to what the business was and compared to the financials, this may not have been a super high price, but compared to what it is right now, obviously it's a super high price. And then they increased shares when it was 181, and then it went to 145 and also increased. As you'll see here, 137, 300,000. And then they sold with the average closing price of 115 back in Q1 of 2022, and we haven't heard anything since. And you can kind of see here that their cost basis has been pretty high, probably near 200s or 180, 200, something of that sort. So for us, I mean, a lot of people here, pretty much investors here, have bought at even below 100. My cost basis is near 84, I believe, and so I'm very happy with what I'm holding. But yeah, if I had bought at 200, that would be a pretty big issue. It would take some time. I'm pretty sure the company would actually reach that price again, even 300 here and more. But it may take a while, is the thing. So that's what they have been doing in the past, Charlie Munger with his daily journal. Now, the other interesting thing here, Michael Berry, and he actually loaded up on Alibaba and JD.com in fourth quarter in news that were actually we kinda were thinking that it could be the case eventually, because Michael Berry has been tweeting about China pretty much. He was pretty much positive for China. And you will see in this article, which kind of mentions how much he bought. Let me find it over here. That he bought about 50,000 shares of Alibaba stock in the fourth quarter of 2022. This keeps popping up. And during which shares traded at an average of 78.8, which I think is a fantastic price. It's actually even lower than mine. And yeah, from that price, the stock has increased by 32% right now. And he also bought JD.com, which is another one that I like quite a lot, but currently I'm not holding personally. Although I would definitely like to have some. Now, what is going on right now is the last thing that I wanted to point out in regards to Alibaba, because you may be thinking that because of this news, investors could be rattled, could be selling and all that. But you can kind of see here that in Hong Kong, actually Alibaba is up about 3% for the day. Now, we don't know whether this is going to change later, but obviously the news that Charlie Munger is actually thinking that Alibaba has been one of his worst investments, have been flying around, so it has been already well known, but still the stock is up. So you can understand that if you don't have definitive actions, like somebody actually selling the stock, more than likely it won't really move the needle on the downside. So today we're potentially looking at the stock price increasing as well. It looks like that may be the case, but we will be on the look and see whether Charlie Munger and his daily journal will be eventually getting rid of some Alibaba. In my view, it doesn't make a ton of sense right now, especially since the company has been on an uptrend for a long while now. Yeah, granted, in the past couple of weeks or maybe even a month, the stock has been, for the most part, going down. But this doesn't really mean much. It definitely happens within bullish trends. You have bearish trends and vice versa. So it doesn't really reflect anything about the company for the most part. But this is what has been happening. We'll see what happens with the stock price in the next few days or so. But I wanted to make a video and let you know what Charlie Munger thought, because it's interesting, and obviously a lot of people are actually want to know about Charlie Munger, me included, and we respect his opinion. But he hasn't actually really sold yet, and this is a thing that you have seen with other stocks, for instance, that Berkshire Hathaway has been trading. Like for example, Kraft Heinz was an investment that went wrong for them, but they still hold it. And so, you can have an investment that is not going great for a while, but if you believe in it, if the company is good in regards of their financials, of course, not just because we say that it's good, if their financials are solid, if for instance, they are paying you dividend, as Kraft, for example, is, then it may be worthwhile to actually hold for a while and wait for sort of like the turnaround, or for the company's stock price to reflect the actual company financials, which is the case here for Alibaba. Still, the stock price is actually significantly lower than the financials of the company. So thank you for watching the video. Do tell me what you think about Alibaba, guys. Do you think Charlie Munger will get rid of the stock? Now, I may actually even make a poll out of this one, because I think it's an interesting question. But do let me know with a comment below. Remember also to leave a like and subscribe, and I'll see you in the next video. Bye-bye.